Hi everybody, I'm Serge Kekilembi and thanks for joining me for the weekly US markets report. Time to trade the markets, the week ahead, perspective and analysis. First, we're gonna have a look at the economic calendar. Second, we're gonna have a look at earnings. Third, we're gonna take a look at some news. And fourth point, we're gonna go to the US S&P 500 sectors map, and then on the fifth point, we're gonna have a look at some charts and do some technical analysis and price action. Okay, so let's begin. And this is for trading on the week beginning on Monday, October the 2nd until Friday, October the 6th. Okay, so now we are in a new month. That's the month of October. So first of all, let's have a look at the economic calendar here, and let's have a look at major events and major data release to make sure that we're gonna have a look at the most. Okay, this is it. That's it. That's the most important and very high impact data release. First of all, you can see over here on Monday, October the 2nd, Japan tank and large manufacturers index for Q3. Next, in the EU, unemployment rate for August. Next, in the US, we have the ISM manufacturing PMI from September. Next, on Tuesday, October the 3rd, we're gonna have in Australia the Reserve Bank of Australia interest rate decision. In Japan, consumer confidence from September. On Wednesday, October the 4th, we're gonna have in India the Reserve Bank of India interest rate decision. In the US, the ADP unemployment change from September. Next, in the US, the ISM non-manufacturing PMI from September. And at the same time, in the European Union, we're going to have the ECB non-monetary policy meeting. Okay, so that's it for our economic calendar. Next, let's move on and let's have a look at earnings. So you know now we are in earnings season. So let's have a look at some companies. Okay, that's it. So first of all, let's focus only on major companies and on high impact earnings. Okay, that's it for the week beginning on Monday, October the 2nd over here until Friday, October the 6th. Okay, over here. What do we have? Higher impacts over here on October the 2nd, nothing. October the 3rd, nothing. And October the 4th, yes, we're gonna have Monsanto releasing earnings and PepsiCo over here. Next, October the 5th, we're gonna have Constellation Brands and Costco Wholesale, and that's it for that particular week. Okay, and next week is gonna be all the financials. So that's it for earnings. Now let's move on. Since we are entering a new month, we're gonna have a look at the US macroeconomic data, macroeconomic situation. The overview for the US, you see over here, GDP growth rate 3.1%. Unemployment rate in the US is at 4.4%. Inflation rate is at 1.9%. Interest rates are at 1.25%. The balance of trade, the US is still running a deficit, and government debt to GDP 106%. Okay, here are at markets currency, the Dixie, the US dollar index at 93.08. Next, stock market, the Dow Jones Industrial Average making new all-time highs now at 22K 405 points, and government bonds, the 10-year Treasury Notes yield at 2.33%. Okay, so now let's have a look at some new at some data over here. Let's see what is really relevant and over here. Inflation, you see prices, inflation rate at 1.9%, inflation rate month or on month of 0.4%. Next, what do we have next? Money interest rates at 1.25%, and you already know that we are expecting another rate hike in December. Over here, interbank rate at 1.34%. The central bank balance sheets, you see that the Federal Reserve has a 4 trillion balance sheet, and you already know that now in October they're gonna start to unwind that particular balance sheet. So now we're gonna see how the markets gonna react to that. Okay, over here, trade, balance of trade, you already know we are in a deficit here in the United States, so that's it. Well, over there in the United States, since I'm in Europe. And over here, gold reserves, you see the number of gold reserves, and over here crude oil production, and that's it. Okay, so now let's move on and let's have a look at some news. You already know the major news. First of all, the Federal Reserve unwinding the balance sheets. Number two, we have Donald Trump and all the tax reforms and stuff like that. Already we have still the tensions and geopolitical tensions in the Middle East, and also United States, North Korea, and China and Russia and all these stuff like that, and also hacking, Equifax, and more stuff. But over here, related to the stock market, what do we have for news over here? We only have Microsoft CEO Satya Nadella reveals he has just a little bit of Oracle envy. Over here, a small city in Texas is offering to build itself around Amazon's second headquarters. And over here, Jefferies, Amazon is going to dominate the toy industry this holiday season. That's it. Also remember, what do we had earlier, 2 weeks ago, we had the launch of new Apple products, the iPhone X and iPhone 8, iWatch, and other stuffs. And that's it. Really, that's it. Okay, so that's it for the stock market news. Now let's move on and let's have a look at the S&P 500 sectors map. Oh, excuse me, my bad. Over here, let's refresh page, weekly performance, and okay, that's it. Okay, now close the ad. And what do we have? Okay, now we can see it all. Okay, weekly performance, you see everything is in green in technology except for Verizon. Over here, services, everything in green except for Walmart. Entertainment over here, Fox and CBS. Business Priceline, cable TV, bad week for Netflix, bad week for restaurant, McDonald's. And Starbucks also, bad week for Starbucks, but overall in services everything looks green, is in green, as you can see. Basic materials, everything in green. The oil related companies, everything in green. Healthcare, you see the drug manufacturers, the big players, J&J, Pfizer, and Merck in reds, but everything is in green. Utilities in reds. Industrial 50-50. Bad week for GE and Boeing. And over here, consumer goods, you see Apple is going back up. And over here, what do we have? The beverage, bad week for Coca-Cola and Pepsi, and also bad week for Procter and Gamble, and bad week for Nike, and from bad week also for Philip Morris. And over here, financials, everything in green except red for Visa, MasterCard, and PayPal. Okay, so that's it. Now let's have a look at ETFs. Yes, weekly performance. And now ETFs. Okay, ETFs. So as you can see over here, the indices, everything in green. The inverted, that's okay, in red. All the sectors in green except real estate and utilities. and over here large cap in green, mid cap in green, US small cap in green, US volatility XIV and SVXI in the inverted arrow, everything in green, and the VIX and all the stuffs and the leverage in red. So that's correct. Over here in the international developed markets in green, Europe in green, China reds. Over here, Vanguard Total International in red, Brazil in red, Asian Pacific in red, emerging markets in red, Japan in green, LATAM region in red, India in red, and Russia in green. Over here, the global miners, everything in red except for the dust and the GDST. Technology you see over here in green, and you see since we had some hacking activity over here, where's the hack? You see hack at $30, so still going up. Energy in green. Over here, what do we have? Commodities in red. Remember that sell-off in gold and silver, GLD red, SLV excuse me, in red also. Crude oil, USO in green. And over here fixed income, you see fixed income rising, but very it's too shy. It's very corporate bonds over here at point something, 0.30, 0.20, and over here government bonds as you can see down for between 1 and 2 and over here and 3%. Okay, so that's the perfect inverse. You see people are going back to the stock markets, to risk assets. Okay, so that's it for the US sector's map. So now let's do some technical analysis and price action. Okay, excuse me, let me refresh the page. Bam bam bam. Okay, that's it. So now let's, excuse me, I'm just gonna download my upload my presets. Take a few seconds, so please bear with me. A little water. Okay, so now let's begin. Now the cryptos, we're gonna come back to the cryptos later on. First of all, let's begin with stock markets, and now directly let's dive in and let's move on and analyze the over here, the Dow Jones Industrial Average. First of all, the stock market. Remember that particular move over here, that was our second leg, first leg, second leg. You see move completed at 22,400 points for the Dow Jones. So now we have reached that particular level. I see that we can have another push up, another continuation to that particular swing, that particular bullish rally, and we can reach the 22K and 500 points for the Dow Jones Industrial Average. So the Dow Jones has still the potential to do that. And since we are in that earning season, at the beginning of the earning season, that can help to have that little push that's gonna make the stock market reach the 22,500 points, okay, for the Dow Jones Industrial Average. So you see over here, we're trying to interact with the 4 weeks moving average, but we're still bullish. We have a little gap over here, a bullish gap, but the pointer played perfectly. You see over here A, B, C, and D. So that's the D point, but maybe we can push higher and just touch the 22,500 points. Okay, so that's it for the Dow Jones Industrial Average. We're gonna remain bullish, and we're gonna see what's gonna happen in earning season beginning last week, but now in October are gonna take the earnings season is gonna be in full effect and running. Okay, the big players are gonna to release their earnings. Next, let's move on. NDX, the Nasdaq 100. And over here, Nasdaq 100. Let me zoom in and amplify. Okay, that's it, Nasdaq 100. Boom. Okay, Nasdaq 100, as you can see here, all-time high, resistance just below 6,000 points. Now we're trying to move up, still in a inside week candle for 1, 2, 3, 4 weeks in a row. So still bullish. Remember, over here we have a bullish gap, so that gap must be filled. You see over here interaction with the 4 weeks moving average, still above that particular moving average. Over here above the 8 weeks moving average, and also above the 13 weeks moving average, and interaction with the 21-week moving average. Okay, you see that move towards the downside didn't happen to reach and to interact, first of all to fill the gap, and next to interact with the 26 weeks moving average. But now we remain bullish. We are still in the uptrend channel, and that's the region of the supports, channel supports. And now we are bouncing back, going back towards 6K. And if we succeed and break above 6,000 points, so we have the open courts to go much higher. First of all, first target 6,050 points, and next 6,100. Okay, so that's it for the Nasdaq. So let's see what's gonna happen during earning season, and if the Nasdaq can go higher and reach the 6,000 points and close above 6,000 points. Next, let's move on now. Let's have a look at the US 500, the S&P 500. Okay, let's zoom in, and here we go. Okay, so that's full bullish here, very bullish on the S&P 500. Remember last week I was expecting a break above that particular all-time high, and now we are making a new all-time high at 25.20. And so to me it looks very bullish, but be careful because we are so far and very extended and so far away from the 4 weeks moving average. Over here we have a huge spread. That means that a distance between the 4 weeks moving average and over here the 8 weeks moving average and the 13 weeks moving average. So that's a lot of volatility. Also remember the gap over here, bullish gap over here. So since we have like 3 great bullish weeks with 2 small indecision candles, over here inside week candle, over here doji, so now maybe it's time we're gonna push a little bit more higher. You see 20, 25, 30, maybe 25, 35, and then sideways movements. Okay, so pay attention. Now we are too far. That's a lot of we are too far, a great extension. So we need interaction with the moving averages. But remember, earnings season beginning, the Fed starting to unwind the balance sheets, Donald Trump, President Trump, and his tax plan, and the Obamacare still going on. So let's see how it's gonna affect the markets. And also remember, we have the dollar rising. So let's see what's gonna happen now. Okay, but to me the S&P 500 looks bullish since we have a strong bullish candle over here. So we're gonna have continuation, okay, towards the 25.30. Next, let's have a look at the S&P. Now we did the S&P. Let's have a look at the VIX, the volatility index. And the volatility index, you see huge spikes. You see all of the moving averages going sideways. So that means that we are going to remain in that sideways movement, a lot of pressure, and we have the VIX over here still at historic lows at close to at 9.50. That's too low for the VIX, but take a look at those spikes over here. So remember that next week we can have also that kind of spikes and that kind of candles over here. So pay attention and be cautious. See, the markets remain bullish, but at any time spike can entering, and we can have also a lot of volatility kicking in. So remember that. Okay, that's it for the VIX. VIX gonna remain low, and now let's have a look at the XIV. XIV, boom. XIV, very, very bullish, new all-time high over here, close to 100 points, $100 over here. So now we are at 97.55. And remember, gap also over here was expecting that particular move. Remember here that grid bearish candle, 50% was the region of the convergence between the moving average 4 and 8 weeks moving averages. And over here also we had that same convergence, but now between 3 moving averages, 4, 8, and 13. And take a look at that, bam, to the upside for 3 weeks in a row. First of all, going back to the resistance, and now we have a close above that resistance. So to me it looks very, very, very bullish. So now I'm expecting a continuation towards $100 and $100, and next if we have a close next week above $100, $105, and so on and so forth. Okay, but first of all, first target $100. Okay, so XIV bullish. Now let's move on and let's have a look at small caps. Russell 2000 over here, Russell 2000, and Russell 2000, take a look, strong bullish decision candle, new all-time high. So boom, that's it. Take a look at that. Very, very strong, very, very powerful candle. Let's have a look at the big picture, and that's it. Take a look at that. Boom, here we are going very, very, very bullish, and that's it. Okay, so now at 1493, and you see exactly the target is 1500. So we are 7 points away for the target. And next, let's see what's gonna happen. But now let me just draw something over here, because you know we need to draw things. Okay, that's our channel. We're gonna clone that one, and you see over here, boom, that's our channel. You see over here, support, double bottom over here, directly resistance. We also can, now we can draw another thing over here. We can draw this and put this over here. That's gonna be like our 50%, you see, but that's not exactly 50%, but those are regions. Okay, you see over here, bam, above that you see over here resistance, that mid channel over here, support, bouncing at the 104 weeks moving average, going back to resistance over here, pivot points, boom, below A, B, C, D, bound, going back towards the greater channel, bullish channel, support over here. You see that the region of the 208 weeks moving averages. You see all the moving averages over here going back. You see over here testing that mid resistance, over here that's support, over here that's down here that's a resistance. You see, boom, rejected it, boom, going back up, going back to retest, boom, going back up and going back to the to the channel's support resistance over here. And now we see resistance, 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 and now boom, now we're here. And also now we can do this, another cloning, and a little bit higher, and that's it. You see, that's a quarter. You see, that's half and another half, and that's it. You see, resistance, support, 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 52 weeks moving average, and then boom, we are here. So now what can we see? What is the conclusion? We can go much higher, reaching over here. We can go and touch the 15.25 and down, coming back to retests at 14.75, and then boom, you can bounce from there. You see over here that's particular strong bullish flag, but we can also have another one over here. You see that particular range of 100 points, so we can have another range of 100 points over here. Okay, but Russell 2000 bullish. Okay, that's it. So now let's have a look at the bonds. First of all, the 10 years Treasury Notes over here. And okay, remember what we analyzed last week. You see over here going down, boom, boom, and over here, take a look, support, and now what do we have? Boom, break below that particular support. You see, was expecting that break since that big bearish candle, 2 weeks in a row going down. You see, three bearish bars over here, 3 bearish bars. Now we are back here. You see that pivot points region over here at 125, at $125. Maybe now, take a look, that last week I was telling you that maybe here we can retest that particular support, bounce from here and going back higher. But take a look at all the moving averages. They are going sideways. Expect for the 4 weeks moving average crossing below the 8 weeks moving average, 13 weeks moving average, 21, 26, and also 52 weeks in pink over here. So that indicates a strong bearish sentiment. But over here now we can mark a pause. You see, because now we are here retesting that particular support, and you see that's an indecision candle over here, starting that's a kind of a doji, you know, with a little body, not really a doji but an indecision candle. You see over here now, maybe that's a pause in that particular downtrend movement, and over here I'm expecting to see sideways movements. So if the markets are going much higher during that particular earnings season, we're going to see bonds prices go very, very lower, and that means that the yield's going to go higher. Okay, remember that. The lower the bond price, the higher the yield goes. They are inverted. Okay, so now let's have a look at the 30-year Treasury bonds. Yeah, this one. And that's exactly the same thing over here. You see that particular bullish uptrend channel. You see resistance, support, resistance, support. Here, resistance, rejected it at the 104 weeks moving average, and then back to channel support. You see all the moving averages. Take a look over here, 4 weeks moving average and 8 weeks moving average. Bam, going south over here. That's support. You see pivot point, support, and now support, but rejected it. Okay, and that's your 208 weeks moving average, rejected the $151, $152, and now back at 152.81 cents. So now what can we expect? We never know. we are going trying to retest that particular channel's support, but now acting as a resistance. So now I'm expecting the market, the Treasury bonds to go maybe lower, maybe come back here to retest that particular resistance and come back into the channel, or if it is rejected, we're gonna see bond prices going down towards the $150. Okay, so that's it for our Treasury bonds. And next, let's have a look at the Dixie US dollar index. Okay, and take a look over here. Remember what I told you then. I was expecting the dollar to start rising, to start going back up again over here. That's an inside week candle. You see strong bearish candle, 1 week, 2 weeks. You see huge spikes trying to retest the highs, the highs over here at 92.70, and you see that strong rejection still below the 50% of that particular bearish candle. You see over here convergence between the 208 week moving average and the 4 weeks moving average. Now what can we see? If you take a closer look, we can see that the 4 weeks moving average is starting to bend, but going higher. That inflection point over here is going higher, pointing higher. You see over here all the moving averages are perfectly in line. That's 4 weeks moving average. Over here, 8 weeks moving average, 13 weeks moving average, 21 weeks, and 26 weeks. So now, boom, trying to go much higher. Take a look over here. 1, 2, 3 weeks in a row that the US dollar is gaining bullish power over here and trying to go and retest the 94 mark, but rejected it by a 50%. Here now, excuse me, I'm gonna delete that. Okay, here now take a look. Just we are above the 4 weeks moving average, above the 2 weeks moving average, above the 8 weeks moving average, and now we tested its interaction with the 13 weeks moving average, rejected it, but still below. Maybe that's a pointer. Next week, tonight, since we are on Sunday, tonight at the currency opening, forex exchange market opening, and the futures markets also, maybe you're gonna see over here in an opening around $93 and then trying to go higher. Take a look over here. That's a huge spread, 93.28 and 94.75, $1.50, maybe $1.48, something like that. So that's huge. Okay, that's a lot of points, that's a lot of volatility. So that's a great movement over here, more than a dollar and yeah, one until over here. So that's approximately 93.30. Okay, 94. So that's exactly $1.40 over here. So that's huge. Okay, so you can take advantage of that particular movement. But remember, over here we have a gap, a bullish gap, so also you have to be cautious about that. But for me now, the dollar is gaining power, a lot of power, and dollar is gonna go higher from here, because remember, it cannot remain on that particular level. That's the US. Okay, but remember, we have other players all around the world. You see the US dollar is running a deficit, and President Trump wanted a dollar to be much competitive for the exports. But tell me, what does the United States export? What are the United States exports? Nothing. But on the other side, Japan is exporting electronics, South Korea is exporting electronics, we have China exporting a lot of goods, so they have a much more competitive currency, and they need their currency to be more weak. But when we have the dollar being weaker, that's bad for the exporting economies, but because those countries are running a surplus. Also, that's the case also for Europe. So Europe also is running a surplus, so having a strong euro, it's not good. You see, it's good depending on what aspect. You see over here in 10 seconds, I cannot explain all of that because that's pure macroeconomics. So there's a lot of variable, a lot of things to talk about, a lot of specific things we have to look at. But over here, the great idea is just that you need to understand a stronger currency versus a weaker currency. You see, the countries who are running a deficit tend to have a stronger currencies, but on the other hand, the countries that are running a surplus tend to have a weaker currency because that's good for the export. So that's it. That's the main idea. So your main focus should be on that. But then we have other things entering in play. Over here in the US, we have the Fed entering in play, the inflation, also the interest rates and stuff like that, the bond yields, and a lot of things. Since the US dollar is the global reserve currency, so also you have to take that into consideration. But now you see the yuan is gaining power, and also if you take a look at the SDR, the basket of currencies, first of all, before we had only 4 currencies: the US dollar, the euro, the British pound, and the Japanese yen. But now we have the yuan, so now there are 5 of them. Okay, and between those five currency composing that particular basket, we have 3 countries running a surplus. Those countries are the European Union, or if you consider that as a country, as a bloc, as a trading bloc, let's say. And next we have Japan, and now we have the Chinese yuan. And the weaker or the stronger currencies for the countries who are running a deficit, that's Great Britain with the Great British pound, and the US with the US dollar. So you need to take that into consideration and do your fundamental analysis and macroeconomic analysis on that particular topic. And also, that's something huge. You see over here, I can explain that only with I cannot explain that only with technical charts and price action. That's also important, but you see, to be able to see the longer perspective and the trend, you need to understand macroeconomics for that particular topic. Okay, so that's it for the US dollar. US dollar gaining back power and going back higher. My target for the US dollar now, for me, it's to be above the 13 weeks moving average and $95. That's my key level point, and that's my target for the US dollar. If I have a close above, if we have a close above 95, and then going back to 100. Okay, and what does it mean over here? Quickly, let's go over here and let's have a look at the Euro USD quickly, because that's a perfect trade. What it means for the euro, it means for the euro to go down. Take a look also exactly at the same level over here, 13 weeks moving average, and you see me looking at the euro going back, going from 120 towards 130, 113 over here. Okay, so that's the main target for me. So I'm gonna buy the US dollar and I'm gonna sell the euro. I'm gonna buy the US dollar and I'm gonna sell the Japanese yen. I'm gonna buy the US dollar and I'm gonna sell the Japanese won, the offshore one. That's this one. Yuan is CNH, if I'm not mistaken. Yeah, this one, the offshore yuan. Okay, so those are the particular trades that I'm gonna have on. Okay, so that's it. You see those movements, I was expecting those movements, and bam, that's it. You see, first of all, my first target was here. First target 670 for the yuan, and then the 680. First trade, perfect, and that's it. You see, you need to understand key levels. You see, key levels. But you know, oof, that's another video entirely, 2 to 4 hours talking just about macroeconomics. But now, okay, so let's move on over here. So that's it for the US dollar, and now let's have a look at commodities. First of all, let's begin with oil, crude oil, WTI. And let's look. And okay, as you can see, bullish, very bullish on oil since 3 weeks, and that's it. Above $50 a barrel. See over here 54. Remember, I told you that was, you see, the A, B, C, D. You see, first leg, second leg. My target was that pivot point region over here at 53.50, and now we are touching and flirting with the $53 a barrel. So that's perfect. Maybe that's another pointer. Maybe that's the beginning of a tweezer top. If we have another one like this, boom, that's gonna be a bearish signal. But since we only have one of those particular doji candle with a lot of rejection, you see we rejected more than 50%, more like a 55% of the gains, but I remain bullish on the WTI, and next week I'm expecting to see sideways movement between 51.80 and yes, and 53. Okay, and if it's really the beginning and we are rejecting that particular pivot point over here, that's the $53 region, and that's our resistance. You see past resistance over here. Now also that's a resistance, so that's good. But for the moment, you see that particular trade was perfect, bullish for entire month of September. Boom, bullish on oil, and that's it. That pays off. Okay, pretty good, and I'm glad to see that. Okay, now let's do some precious metals over here. First of all, let's begin with gold futures. Okay, gold, and gold. Take a look as we analyze over here. Rejection, you see, maybe I said maybe for oil that's exactly the same play, but we don't know. Take a look over here. Boom, bullish gap, a Nile over here, doji candle standing alone, perfect pyramid, and over here, boom, going back 3 weeks in a row going down. You see, great extension, too far from the 4 weeks moving average, interaction over here, and then boom, following, boom, cancellation. You see those two bearish candles over here to destroy and to cancel and to abolish the uptrend, the bullish sentiment, going back down below the 4 weeks moving average, below the 8 weeks moving average, interaction with the 13 weeks moving average. You see over here support, pivot points, resistance, and that's it. Boom. So now that was my first target. You see over here the 21 weeks moving average at 12.75, and maybe from here we're going to see sideways movement, and by the time the 4 weeks moving average is going to reach the 12.90, maybe we're going to have it's going to be time to start and to rethink a bullish position. But we are in wait, we are waiting confirmation, first confirmation, a close. First confirmation will be to reject lower prices, to see that level over here that the sell-off, the distribution is being handed, and the beginning of the accumulation phase. And next I need to see a close with a green candle, a bullish candle over here over the 4 weeks moving average. You see, like this, boom, and then everything's going to be in place, and to confirm the bullish, the second leg higher. You see, first leg, that's our A, B, C over here, and then our D, first target resistance, and then boom, moving higher towards the 1440 over here, 1440 and 1480. Because let's amplify, we are here in a big bullish channel. You see, supports, resistance, supports, 2 points we need. So boom, and now I can do a parallel, and the parallel, my target, you see from here to here, that's $1480 an ounce for gold. Okay, that's it. Now let's move on and let's have a look at silver. Let's take a look at silver. And silver, exactly the same play, exactly the same thing as we saw earlier just a few moments ago with gold. And that's it. You see, downtrend channel over here, like that. And now here, exactly the same play. You see resistance, resistance. Those two cancel themselves. Over here you see the little pyramid over here, and now boom, maybe here that's the end of that particular bearish sentiment, and bounce back from here. But here we have a specification and something very specific and very unique for silver. That's, take a look at all the moving averages. Okay, so maybe now we're gonna see more sideways movement. Take a look at the the 4 weeks moving average being rejected by the 208 moving average over here in green. That's your 52, 8, 26, 21, and 13 here in red, acting as a support. So maybe that's our support region. And now sideways movement. Remember, a close with like this, a close with a green candle, a bullish candle over the 4 weeks moving average, and then boom, going back higher. And remember also, when we take a look at the bigger picture, you see, since we're in the downtrend channel, that's a shoulder, heads, and second shoulder over here. So that's very bullish. Going back to the neck over here, $18, $18.40 an ounce, and then from there we can go much higher. Okay, so that's it for silver. Remember, and also if you take a look at the bigger picture to see great perspectives, you see over here pivot point, we have a resistance, support. So that's our resistance and our support, and that's a bullish channel, you see over here. And if we can break above that particular level, boom, we can go much higher. And also when you take a look at that, we have a shoulder, head, and over here another shoulder, and that's very bullish over here. Okay, so that's it for commodities, energy, crude oil, and precious metals. And now let's go to the crypto space. And first of all, let's have a look at the World Coin Index at worldcoinindex.com to see the crypto ranking and the market capitalization for the cryptocurrencies. We're only gonna focus on the top 10 over here. Excuse me. Okay, so number one, Bitcoin, you see rising over here, market cap going, we are back above the $70 billion mark. Number two, Ethereum, also you see sideways movement but going up. You see Ethereum on number three, also in a bullish trend. Bitcoin Cash going sideways, Litecoin going up, Neo on number 6 going up, Ethereum Classic going up, Ripple number 8 going up, and Zcash number 9. You see over here sideways, but a lot of great potential since we made an all-time high over here. Now we're going sideways, but at any time it can gain back its momentum and going back higher. Number 10, Digibytes over here, huge spike and great momentum. Great bullish momentum. And you see over here Dash falling at the number 13, Monero also 14, and IOTA over here at number 16. Okay, so that's it for the most popular cryptocurrencies. So now let's go back and let's have a look at charts, and we're gonna do first of all, let's begin with Bitcoin, the most popular cryptocurrency. Bitcoin US dollar over here, and okay, that's it. Last time I was joking with a friend of mine, because when you have a look at Bitcoin like that, it reminds me, I was saying, oh, that looked like the Burj Khalifa over there in Dubai. So you see, that particular rise, it was too much, but well, anyway, that was just me joking. And over here, let's have a look now. What can we see? Remember last week, what did I told you? You see A, B, C, and now we are going to the D. The D, that was that particular region, but now we are beginning the same pattern again. You see the A over here, the B, that's our C pattern. You see, remember, 3K over here as resistance, now 3K over here as support. You see perfectly. You see that was the PBOC and Jimmy Dimon and all that debacle with the Bitcoin, but great. You see over here rejection, didn't act as a pointer, but we never know. A lot of volatility with cryptocurrencies, so at any time you can see boom, a huge sell-off. If another great catalyst of great info, great news, a negative one with a huge impact coming out from out of China or the Asian region, and so we can see another sell-off in the crypto space, especially over here with Bitcoin. But going back over here with the technicals and the price action, remember I told you that particular candle over here, you see the body of the candle, you see over here the 50% was in coincides with the convergence points between the 4 weeks moving average over here and the 8 weeks moving average. And I told you, if we have a close, not a spike, but a close above that particular region, that's a bullish signal. A close over here means that we are trying to go back towards 4,600, and that's exactly what the Bitcoin is doing now. And now you see we are at 4,400, and now 100 points from there, you see trying to interact back with the 4,200. So we are between the 4,400 and $4,200 exactly. So maybe you see over here that V shape, that's the pattern. You see we have a small one and a bigger one. You see the bigger one is from 5,000 towards 3,000 and then going back to 5,000. So that's a $2,000 spread, $2,000 volatility, $2,000 opportunity, and $2,000 risk also. But now, since for those of you who entering in, who took the opportunity and entering in Bitcoin at those levels, that's great. You should take a look over here. That's a $1,400 gain, so that's huge, that's great, congratulations. But the other opportunity will be entering over here at 4,400 and then trying to ride it to the upside towards the 4,600 and push higher towards 48 and then towards $5,000. Okay, so that's it for the Bitcoin. So we are today is Sunday, so let's see what's gonna happen during this particular week. Okay, so that's it for Bitcoin. After that particular strong and power bullish candle, I remain bullish. You see buy above 4,400. Okay, first target 4,600 and next 5,000. That's it for Bitcoin. Next, let's move on. Let's have a look here. Now let's skip the ETF. Let's do only the cryptos. Now let's focus on Ethereum versus the US dollar. And over here, exactly the same thing. You see over here the two distributions. You see in red we have our, excuse me, I'm gonna make it smaller so you can see all the details. Okay, you see over here in red, that's our bullish channel, uptrend channel. You see resistance, first of all, support, resistance, support, intermediate channel over here with support, resistance, support, and now we're trying to go back here. You see that's particular resistance, intermediate resistance over here at $450, $15, excuse me, coincides with our pivot point and resistance over here. So between $375 and $415, that's our probability zone of conflicts over here, critical zone. So that's it. So now I'm expecting the Ethereum above $320 to go back towards first of all $350 and next $400. Okay, and if we can break above those levels, that's critical resistance, those two resistance over here, next target will be $500 and maybe over here $520. You see our typical A, B, C, D, and also if you take a closer look, that's a bullish flag. Okay, so that's it, the flag, first leg flag, and then second leg coming. Okay, so that's it for Ethereum. I remain bullish on Ethereum. Okay, that's it. And yeah, full disclosure, I own Bitcoin, in a small amount of Bitcoin, since all of my trading I'm doing that on the speculative level with derivatives. Remember I told you here in Europe we have access to derivatives, so I'm trading on margin with a leverage, a 10-time leverage. So that's it. So imagine I have a fraction, I can operate with a fraction of Bitcoin and all the cryptos, or maybe the most popular ones. I have Bitcoin, Ripple, Dash, Ethereum, Litecoin, Ethereum Classic, Bitcoin Cash, and Bitcoin versus the dollar and versus the euro. And we have also derivatives on those particular cryptos, CFDs, and also we have fraction. We can trade fraction units of those particular cryptos, and also we have access to 10-time leverage with all of them. Okay, so that's very useful, and I have all of them in my trading account, so I don't have to bother. It doesn't bother myself, you see, with a lot of wallets. You see a wallet over here, a wallet over there, an exchange here, and an exchange there. No. I only have blockchain and Ryrex app e-wallets for my Bitcoin, in blockchain, Bitcoin and Ethereum, and with Ryrex only for because I have a Bitcoin card. So I have a Ryrex app for transferring Bitcoins from my wallet towards my card, so I can spend my Bitcoins. And that's it. But most of our trading, I'm doing that only with CFDs, because I know how to play that game. So that's it. Okay, it's much convenient, and we take advantage of the system over here. So since we have access to leverage and to CFDs and fractionable cryptos, we're gonna take advantage of that. Okay, so that's it. That's for my full disclosure. So now let's move on and let's do Litecoin. LTC USD. Okay, over here Litecoin, and Litecoin, that's exactly the same thing. You see over here that huge bearish candle, but remember we're still in that inside week candle. You see with that bullish candle over here. Now we are in the lower half of the bullish candle. You see that's the half, upper half, lower half, and over here we are at the lower half of the inside week candle, and also in another inside week candle with that particular bearish candle over here. See the pointer rejecting lower prices, going back in, convergence between the 4 weeks moving average and 13 weeks moving average. But you see over here I see a lot of another 2 to 3 weeks of inside week candles and sideways movements. You need a close above that particular level. I need a close above $60, and then from $60 we have a huge and great potential to go higher and going back towards $80. Okay, so that's it. Litecoin sideways movements. Next, let's have a look at Dash versus the US dollar over here. And Dash, when I'm looking at the Dash chart, it reminds me a lot of the Ethereum chart, or talking about the patterns, you see, and see exactly the same pattern. You see over here, first distribution, second distribution, accumulation over here, sideways movement. You see trying to go down. You see that's the 50% of that particular bullish candle. You see over here the convergence points between the 4 weeks moving average and 8 weeks moving average. You see the pointer over here, and now take a look. We are bearish below the convergence point, and take a look where is the 13-week moving average. So that move that I was expecting over here, number one, great, but number two, now it also we can see something like that over here. Okay, boom. So now below that point over here, take a look, that's volatility from 320 towards 275. Okay, so that's more than 45 points of volatility, so that's huge. Okay, so dash, bearish on dash, but remember inside week candle over here, and that's a triangle. Okay, over here let's draw the triangle. Okay, you see, boom, like that. And I'm gonna clone this one. Okay, and this one like that. You see, that's our triangle. So now if we break below, boom, and if we go above, boom, like that. Okay, but remember the bigger picture, we are uptrending. So that's our A, B, C, that's our channel support, bounce from here, and then boom, going back higher. So that one, this one also, I can clone this one and take that and do it like that. Okay, so I remain bullish also on dash, but first of all, maybe here that pointer is gonna play out, and maybe we can go lower and retest, going here and test the 13 weeks moving average, and maybe we can go lower over here and retest the $200 resistance over here, now support, and bounce from here and going higher. Okay, so pay close attention. So that's it for dash. And two hands, yeah, let's do Ripple and XRPUSD. Let's do Ripple and then IOTA. Okay, you see Ripple over here. So now Ripple, that's great, but I'm expecting and I'm waiting to see Ripple above that particular level. You see, Ripple above that level is going to be great. It's going to be a great buyer opportunity to go much higher. And over here, that's, let's say, that's our support. Okay, you see here, also let me clone that one. Okay, like this. Okay, you see triangle formation over here. So close below, going back below, close above that particular level. You see we already have a close above the 4 weeks moving average and convergence point between 3 moving averages. 4 weeks moving average over here in blue, that's your 8 weeks moving average, and in red, that's your 13 weeks moving average. Since we don't have a lot of data in a weekly chart, but that's it. Let me interpret. Let's do some interpretation of what we see over here. So now if we are above 22 cents, boom, first of all going back to 30 cents and then 35 cents. You see that over here. So that's my target. So see now it's going to be there's a lot and a great potential, and I'm trying to get in Ripple, but since I have Ripple in my CFD account, so I'm gonna trade that and do the I'm gonna have a small amount there, since you know I'm paying an interest because when you take leverage, let's say the broker lends you money at interest, so I have to pay an interest. So the bigger the position, the bigger the interest. So I'm going to be scaling my position, and you see, trying to entering in that, but I need to calculate. You see, where's your risk and how much time, because you don't know. Since it's trading like a penny stock, you can spend like a month, 2 months, 3 months. So that's not trading. At that point, that's gonna be investing. So me, I'm a speculator. I don't invest in stuff. I trade stuff. I only invest, let's say, in physical stuff, in gold and silver, but not in cryptocurrencies and stuff like that. No, I don't invest. Me, I speculate. I trade them. Okay, so that's my point. So that's the reason why I'm in love with CFDs. But you see, when you have something trading at such a low price, it's difficult for you to see how you're going to speculate, how you're going to trade that. Great speculation, it's with Bitcoin Cash, Ethereum, and Dash, and Bitcoin also. That's the biggest of them all. So for speculation, it's perfect. But Ripple is going to be more of an investing, but investments of that kind with that kind of assets, I don't really like that. So I'm going to take advantage of some movements. You see movement like that, but it didn't happen so often. So you see, I have to think about that. Okay. So next, let's finish with IOTA and versus the US dollar. Okay, and over here you can clearly see that IOTA is in a bullish, sentiment. You see over here, support, resistance, support, bouncing back, rejecting that. That's a good morning. And over here also IOTA, great potential to going back towards the $1 mark and surpass that mark, going to 110 and 120. So IOTA is a buy. So buy above, let's see over here, IOTA buy above, oh excuse me, IOTA over here buy above 65 cents, and then boom, going back high. You see 55 cents is going to coincide with the 50% of that particular bearish candle. You see over here we need a continuation above that. You see we already have a close above the 4 weeks moving average. Now we need another one above the 8 weeks moving average, and then boom, going back higher. First target, you can say 85, $1, $1, $1.10, $1.10, $1.20. So IOTA is a buy. So also take a look. Since we don't have fundamentals for the cryptocurrencies, what you need to look at: catalyst, information, utility. The greater the utility, the greater the demand for that particular crypto. So you need to have a look also at the offer. What the IOTA technology, that particular coin, what is it useful, the utility and stuff like that, and you're gonna see and make your own decision if is it worth it or not. Okay, so that's it, people. Thank you very much for hanging with me, and that's it. You can follow me and see or subscribe to my channel and stuff like that. Pay me a visit over here at www.jctweem.com. That's my website, and over here you can see all of the what I'm doing exactly over here in Spain, what I'm working at, the broker, and investment in gold and silver, stuff like that. And you see you can send me a message over here, and also we have a phone number, especially for WhatsApp, Viber, and Facebook Messenger and stuff like that. Okay, also LinkedIn and much stuff. Okay, so people, once again, thank you very much. So bye bye, have a great trading week and make some money, take some profits, manage your risk, and I see you next week. Okay, have a good one. Bye.